good for stock market bulls. Oil really is having a bad problem. And I've said this for months now. I absolutely hate oil at the moment, and I have no bullish intentions over the long term because I do think that oil will eventually stabilize and move down into the 65. I'm not the one that goes $300 oil. Could be wrong, but inflation really would have to be getting super out of control, and I don't think it's going to get much worse than where it is right now. Now, where is oil though? Is there a small pullback potentially coming? Well, we're entering into, of course, from the top, a decent fib pullback. This is the 61.8 to a 66 fib pullback. We've also got the weekly high sitting behind over here. So if we come down to this zone, again, a critical area, and then we do bust up, will I potentially get bullish on oil? Well, I would probably need to see it go past 95 and then look towards a little bit of bullish side for now. And to get more bearish on it, I'd want it to break underneath 84 and then, of course, look to sell the rips down into either this level here, which would be the price of around 75.50, or of course down into my eventual plan, which is 64.50. I don't think it gets there within a month or anything. This is going to be a long term, 3 months, 6 month, 12-month plan to get down to those levels. But oil at a critical point, no surprises ahead of news. Tesla, where is it? Resistance ahead of news. Now, be careful here on Tesla. There's real chances of a whole bunch of different things playing out over the next 24 hours. There's the chance that it goes past 960 quickly and then dips down. Be careful of that. That's what we call like a swing failure, effectively taking out the orders that are stop loss behind here and then quickly reversing from that. If we manage to close above it though, the real chance here is 1,050 for Tesla traders. If you want to wait for more information, then of course have the patience to see what the stock market does, and we'll look at that in just a few moments, and you'll see that maybe that could activate this trade. Apple, long leg doji ahead of course, the news coming out. Massive ramp here on Apple, very strong stock. It's hit lots of different trend lines. This is basically the last one you could have drawn if you were going to draw it. We talked about trend lines in the previous video. The long leg doji shows indecision or equilibrium ahead of the market decision. So of course, it's waiting to see what the market brings. We'll be watching that. Now, what are some of the good points for the bears? Well, of course, the worst point out there is too many retail traders are bearish and they keep opening puts, and it's kind of annoying. We'll see that when we look at the options. But the good case is that hype stocks are going wild again. We've seen this Triple B, Y, Bed Bath & Beyond going wild. Kramer's fighting with Wall Street Bets on this one, and a whole bunch of things happening. Of course, this was similar action to what we saw happening in March and April before, of course, the market tanked itself. Be careful in a stock like this. Look, it's not my jam. I understand there's a lot of money to be made if you get on it on the right thing, but you've got to know when to get out. Did it just hit resistance? Well, it seems to have, and that was certainly a key level. But as we know, anything is possible in these stocks. We're looking at it just to show us a bit of the idea of people getting, I guess you would say a bit silly with their money, getting really intense, basically gambling a little bit on the markets. That's what it is. Let's call a spade a spade. DAX 40 trend line ahead of news. Nothing else to say about that. It's hit the trend line. We know where we're at. Big important zone here over the next 24 hours. IWM, Russell 2000 versus S&P 500. What's it doing? Well, of course, it's at a zone where we were critically before we entered really the true real bull market. That happened back of 2020. That's when people all got convinced. Everyone was convinced it was all good. We're green, we're good. This is an important ratio. Have this on your charts. Look at it. It's going to be a big one. And you would expect small caps to outperform the big caps at that point. What about bonds though? Are they doing well? Well, we know that during, of course, previous sell-offs and rallies, bonds usually come with the market during that time. So if we go over here to May, we saw bonds dropping off. This is the, of course, high yield bonds dropping off. Now, a big portion of that was because when we were rallying, we saw yields rally as well, which puts downward pressure on the bonds. But the bonds were falling off. They've slowed in recent days. If we take a comparison between the SPY and LQD, which is the corporate bonds, kind of like the quality investment ones, what you'll notice is it's been quite a few days here, really since the 28th of July, where LQD hasn't loved this move. It's not willing to take risk. Remember, yields have stayed relatively the same, so it's not like we can blame yields. The bond market is saying, I don't like this move. And trust me, I think the bond market is more correct than the stock market most of the time. It's strange and almost worrying that the bond market is not going with it. Now, things can change and they could become convinced by the Fed statement and go off in a nice, happy way. But at this stage, look at this. LQD is not coming with the stock market, and it's something that you should put on focus. Remember, it is important, at least during the beginning of the rally sessions. If we go over here to 2020, you can see what happened. The bond market came with the rally, dropped off a little bit, and then, of course, the market also went sideways during this time, and then it came with the rally. And then after that point, doesn't matter so much. But at the beginning, it should be coming strongly with any strong rally. It's not so much doing that at this stage. What's going on with the S&P 500, though? We said that we would bring up a whole bunch of charts. So let's begin by discussing the key level here. So we know that, of course, the 0.67 was a fairly important point on the chart. So if we go over here and we go 0.677 and we pop that on our chart, you'll see where it is. Wow. The 200 SMA, the 0.677, the downward trend line, the kind of right amount of time. What was it? 37. We're pretty much in that vicinity. The POC coming through. There's a lot of confluence at this point. If the bears really want to fight it, they probably should be fighting it here. There is another point moving forward, which is around 44.10 that a lot of people have as an interest zone. But if bears are going to make the stand, you would think they do so around here. How do we figure out, though, when the bears have some control in the market? Well, guess what? We've been discussing the same concept now probably for 200 points. And a lot of you are sick of it. You're like, Tom, stop talking about the possibility of a bear market. I will maintain, and I will still say this, that we have not seen one reason to actually go short yet from the price action. And this is the difference between someone that's cautious and looking for a reason potentially to get out and then just randomly shorting levels. You've got to be careful out there, guys. If you short, of course, options has been the better pick for that. The unfortunate thing is too many retail traders have chosen that option of doing it because they're scared of the stop loss. It's expensive, obviously, to do so. But what we've got here is a series of higher peaks and higher troughs the entire time. Now, is it extended? I think every indicator on the sun is probably saying and screaming, you've got to sell. That's what it's probably saying. But of course, people have been ripped up through this, unfortunately. We haven't seen the turn because we haven't even taken out one of these lows yet. Will we get one? Well, the critical points to be looking at are going to be over the next 24 hours, 42.77. A break underneath, a pullback a little bit, a potential sell-off. We've got 42.50. And then we've got the big one, 4,200 and 41.22. Make sure you load up your gaps as well. 41.22.8 is around where there's a gap left by the CPI core inflation. I think if a pullback is to occur, this is a likely area for the market to target into. And it's around, if we go here, about 4% away. So we haven't seen one turn yet. This was a decent amount of consolidation. There's probably some orders here. The market goes underneath, pulls back a little bit, and then hopefully sells off. And if it's going to do it, it should do it here. And the reasons why are really everything. Trend line down, of course, the average over time. We have the take of the highs, the POC, the 200 SMA. There's a lot of reasons to hate this level if you're bullish. In fact, for me, it's probably the first time I'll say it. Yeah, I'll probably be looking for something in the next 24 hours in terms of these markets. But if it's not there, guess what? I got immense patience. So should everybody else. It is what it is. You can't know exactly what's going to go on. You're just stacking the odds in your favor. If the market goes through this level, so be it. You should always have some form of investment portfolio that's generally long, unless there's a real reason to be bearish on the markets longer term. And inflation is not one of those reasons. I've always said it here on the channel, and I never change my mind here. I believe that land is the deadly one. That's the one you've got to be careful of. If there's big issues in land, you've got to be careful. If you're interested in more stuff about that, you can always do our group mentoring. I teach it in that process. Let's go over here to the max pain over the Wednesday session. Well, guess what? You guys keep buying puts. I don't know what you're doing. There's puts everywhere. 425 now for max pain. That would be consistent with one of our key like little sup levels that we saw there before. So maybe we get down to 425 after the Fed's minutes or core retail sales. Here are where the big puts are, but it doesn't really get better moving forward. We've got the Friday, which is the interesting one, 407 here. So still quite low. It's creeping up, but that's a long way away from where the market is. But it's when you go deeper out. If we go over here into the 31st of August, 416, at least somebody's going bullish here. 445 calls opened en masse. We scroll into something like September. Let's go here to the 19th. I'll just check there where September would be. So we're looking September. The Friday will actually be the 16th. So we'll use the 16th one. And this, again, 408. So the big expirations with the big amount of puts, there's a lot of puts sitting on 400, which will probably be a huge blocker moving forward. We'll update you, but at this stage, there's puts everywhere, and you've just got to take it day by day and understand that when there are lots of puts, it's hard to short the market. It really is. It's when there's lots of calls that you should be starting to say, well, maybe I need to look for the reasons. And if you get them, so be it. Bitcoin looks absolutely crap. It's on the trend line. I just think it's trash. The reason why, and I'm sorry to Bitcoin people out there, I mean, can you really look at this chart and say that looks cool? It doesn't look cool. Let's move over to Ethereum. That looks a lot better. Ethereum has been, really nice base. We had the max pain concept. We've had nice swings on Ethereum. We've hit the 2000. Yeah, we've rejected it. If we keep selling off on the stock market, expect something like this level, which is around 1700 to 1750 on Ethereum. But it seems like most of the big traders or most of the good action has moved over to Ethereum. So that's the one to watch. We've been talking about it all video, so let's bring it up right now. Of course, core retail sales, 8:30 a.m., 1 hour before the market opens, New York time, guys. FOMC meeting minutes, that's coming out, and a whole bunch of annoying FOMC speakers coming out as well. Bowman, he won't bugger off. He comes out at before 9:30, and then he comes out at 2:20 as well. He just wants to talk. So he's ready. We've got the meetings ready at 2 p.m. and we'll probably find out by the end of Wednesday, maybe some form of actual direction on this market other than just bull into the sun. Yeah, we'll find out. Thanks so much for watching. Subscribe if you enjoyed the content. Give it a like. And remember, if you're interested in some of the things Tiger Brokers offers you, the community members out there, you can look at the link in the description down below and check them out. Thanks and bye.